Welcome to another episode of Reinventing Finance. I'm very glad to be here with my co-host Tom and our next guest, Stephen. Stephen, welcome aboard.
Very nice to be here, Nick. Thanks very much indeed, and nice to see you too, Tom.
Thank you.
Stephen, why don't you briefly introduce yourself and tell us what you do?
Sure. So I'm Steve Mendel. I'm the CEO and one of the two co-founders of Bought by Many. Bought by Many, amazingly to me, is 8.5 years old. We set it up in September 2012. And for the last 4 and a bit years, we have been focused exclusively in and around the pet insurance space. So we launched into pet insurance in February of 2017. We launched into Sweden in July of 2019, so a little over 18 months ago. And I'm delighted to say that we launched into the US in March, so last month, a few weeks ago. Really exciting for us.
Awesome. Thank you. Thank you so much. And I guess you've been around the block for a while.
Does that mean that I'm very old?
No,
what it means? I've been around the block for a little while.
Well,
I mean, maybe you're right. Maybe I am very old.
I'd say you founded an insurtech whilst we weren't even having the discussion whether it would call instech or insurtech. Maybe let's
correct before that, even before that,
right? So hopefully that is a diplomatic way of kind of getting out of the hole I just stuck. So, and for me, you are the, I love MGAs, I love target groups, and it's always, if you think about that, have a look at what Bought by Many is doing. What I didn't know was that you only rather recently, halfway through your journey, decided on pet. How did that came to be? Why?
Sure.
What was that decision making like?
Yeah, good question. So when Bought by Many started, as the name might suggest, we created communities of people who had similar but niche insurance needs. So examples might have been pet insurance for Labrador owners, but also included travel insurance for diabetics and personal accident insurance for commuting cyclists and professional indemnity insurance for mobile hairdressers. And we built these communities using search and social tools, and our agenda was to get access for our members better insurance. Where we defined better insurance as something about product, something about price, and something about customer experience. And so we set out to try and get these 3 dimensions of better for each of these communities. And we were very successful in getting better price. We were occasionally successful in getting better product, but we were never successful in getting better customer experience. And so what happened was that when individuals joined our communities using a search device, and usually on a mobile device as well, they would have a very rich, engaging experience. And then they would click through from our site to the underlying insurer's website, and then it would all go horribly wrong. And yet people still tried to claim from us, to complain to us, to renew with us, even though we weren't the insurer, and they had a policy with often a household brand names insurer on the top of it. And so we learned a bunch of really interesting things from that. So firstly, if you want to do better, you've got to start again, because what currently is out there just doesn't do better. And secondly, brand counts for very little. So over a series of moves over 2015 and 2016, we went from being this introducer to being an insurance provider. And how did we decide where to focus? This was a super easy decision. At its peak, we had 330 different communities, 1 million different members, introducing to, I think, 31 different insurers. And we ranked all of those million members in terms of levels of engagement they had with their community and with us. And the ranking was very clear. The most engaged communities were pets, second were travelers, third were small businesses, and fourth were cyclists. So this was our product rollout strategy. We were going to start with pets, move on to travel, then small business, and then cyclists. And so February 2017, after these several moves that we made, was the stepping stone to other things. And then in January of 2018, we launched into niche travel. And then in April of 2018, we launched into small business insurance. And and everything was going incredibly well, yet the pet was growing much, much faster than anything else. And frankly, too fast for us. We were a small business at the time. And so at the end of 2018, we took the decision. It was a really tough decision at the time, although frankly, looking back, it feels like an easy one, or it should have been an easy one. We took the decision to shut down travel and shut down the small business and focus exclusively in and around pet, and aim to be the world's leading pet insurance provider. It's not possible to be the world's leading anything from just one country. So therein began our moves overseas. As I've said, Sweden followed about 8 months later, 7 months later, and the US last month. So we're very excited about all of this, and don't at all regret any of the decisions. I like to think about it as focus. So we started in focusing in lots of different things, then we focused in 3 areas, and now we focus just in 1.
Awesome. That's
May I ask if you did consider to change your name?
So sure, and we have, and we are. So in the US and in Sweden, we are called Many Pets. So we've taken the many from Bought by Many and put the pets piece on the end.
But let's say, I mean, for the whole company.
So the overall company is called the Many Group Limited.
But you could also change your name in the UK as well.
Oh, for sure, we definitely could. But
did you think about this, or?
Well, we have incredible following in the UK, and we insure now nearly 500,000 pets, which has really fantastic brand awareness now for us. So any decision that we would make about changing name would be a very tough one.
Okay.
Fair enough.
And names, as we know, don't really mean a lot, as long as they are memorable, pronounceable, and people really genuinely understand the connectivity between them and anything else. I mean, why would Amazon be a delivery service, or Apple a manufacturer of laptops and computers and watches and iPhones?
Yeah, I think it's really interesting. I remember, because our family business was classic car MGA, and they were called Oldie Car Cover, and then they branched out, and at some they shortened it. But I think I thought it was quite interesting what you said, and if you could elaborate. You said brand doesn't account for much in insurance. Could you elaborate a little bit what you mean?
So I think what I said was brand doesn't count for much. So the rationale for saying that was, at the time when we were offering multiple different insurance policies from multiple different providers, consumers didn't decide to buy or not buy on the basis of the brand of the underlying insurer. So even though many insurers, and we were only in the UK at the time, were spending tens of millions of pounds building brand and sponsoring football shirts and putting adverts in the Sunday newspapers and all this kind of thing, actually consumers were saying, really, that's kind of very interesting, but not really relevant to us. What's relevant to us is we want a great product provided in a great way that we can use. And it's got to have a sensible pricing on it. And then past that, we're just as interested in what the reviews say as the name on the front of it.
Okay, that's interesting.
And this has absolutely created the opportunity for new players, not just in the insurance space, in many, many, many different walks of life, where new players have as good a chance of success as incumbents who are lumbered with very expensive costs that they have to cover.
I understand.
Just on that initial anecdote that you've meant, could you, when you said they had this great engagement experience, and then you had a link through, and then things went horribly wrong, can you put some numbers behind it? So I would have assumed that by the point that you've went through the whole discovery cycle, of insurance, and then it's not great, but it's hopefully not painful. Can you kind of see that we've lost 30% because of their website being rubbish?
So I mean, I can tell you that the lion's share of the customers, the vast majority, were joining us on a mobile device. And the vast majority, so this is 2013, 2014, right? The vast majority of insurers did not have mobile, flexible quote and buy processes. So you'd have consumers kind of like going, oh my God, like I need to stretch the screen to find the click or the next step button, because nothing was rendering appropriately for a mobile device. And so what we got was a load of complaints saying, I wanted to buy, but I couldn't even find where to enter my credit card details. And that was not because you couldn't enter the credit card details. If you did it on a large screen, that would have been fine, right? But the point is that most people were not.
And truth be told, I was sitting a while ago with one of the larger price comparison sites, and the problem still persists.
It's quite unbelievable to me. And price comparison is a particularly big problem because they're trying to get an enormous amount of information onto a 5.4 inch screen. I mean, there's not a lot you can do in that very tiny space and still make it legible.
Yeah. But what they were mentioning at the time, they were seeing more traffic through mobile. And because of the way the UK price comparison sites, they still pass through a lot. So you don't quote bind on the price comparison site, I believe, right?
Correct.
They saw a significant drop on the mobile traffic.
Right. So exactly. This is exactly the same thing, right? This is exactly the same analogy and works in exactly the same way.
Yeah. Yeah. It's interesting. I mean, these days. I guess segueing a little bit into, and you've mentioned it, your journey, and I believe, if I got my dates right, I think in 2017 you started taking venture funding. Is that the correct?
Yeah. So our A round was October 2016, in fact, but close. Okay. Led by Octopus, and Munich Re participated in that round.
And can you tell me a little bit around what that decision was like? Why did you arrive at that point? You had a working business.
Yes.
Did something change, or was this?
So no, it was really about creating more firepower to grow faster. So was it necessary? No. But was it necessary for growth? Yes. And I think that's how we think about venture funding. If you haven't got compelling unit economics, there's no point doing more of it. So get your unit economics right and then grow as fast as you can.
I mean, it's funny that I think there's different philosophies around it, and time will tell. But I do agree that there is. I think that you need to figure out your unit economics early on and don't hope for the best later.
Right. It's much harder to fix these things when you're in multiple countries with tens or hundreds of thousands of customers than it is to fix them and get them right and then replicate from there.
I mean, what I found is, and it's a little bit, similar as, when do you get your culture right? How do you spend? How do you, are you more of a frugal, more of a spending? I believe that, you set the path pretty early on. I would imagine that, being more unit economics focused is harder when there's more money around. And, you need to move faster. It's just tougher, I'd argue. So getting the basics.
Yeah, I mean, well, it depends on the agenda of the VCs that have put the money in the first place. So one of the big advantages of doing things in the private markets is that you can do this to your own heartbeat, to your own agenda, without doing so in the public markets where everyone can see what the hell you're up to. And so, we've made some mistakes along the way. We've had the flexibility to get on and fix them, and we have fixed them. And when you do that in the private market space, it's very easy to take the time and do it properly, so that for the future, when you replicate from there and scale from there, you got it right because you built it on a sensible bedrock.
Yeah, totally.
I just wanted to add something. If people are interested in it, I don't know if you know the very famous interview of Brian Chesky, Masters of Scale. That's the podcast of Reid Hoffman. And this episode is called First Unskill Before You Scale. And that's exactly what you're just explaining.
I have never listened to that, but I'm delighted that Reid Hoffman thinks this is the right thing to have done.
It's an excellent podcast. And it's about Airbnb. And they first have to solve the problems in New York but there are a lot of startups, they scale. And if you have not solved your problems, you're not going to solve them by expanding in other markets or growing very fast. So I just wanted to add this to your comments, because this is a very classical problem, because there's just too much money in the market.
Right.
So if there's too much money, it's not that there's not enough money. So and there's high valuations. So and that makes it very tentative to take too much money too early.
Yeah, and because there's a lot of money around, it's very attractive to do so, and and there's a lot of pressure to take on lots of money.
Yep.
So I guess kind of from just out of interest, because it's also stating Britain's most trusted pet insurer. I had you flagged as an MGA. Do you have an insurance license? Okay.
We are not an insurer, but thank you for that splitting of hairs over the words. We do not have a carrier license. We are an MGA. You're completely right. The actual award is for Britain's most trusted pet insurance provider.
Okay.
But consumers don't understand this word provider, and it's completely irrelevant to them. And actually largely is an unhelpful extra word, because it's just confusing.
Yeah.
And if you just put it on the screen like this way, you can always say, no, provider was just it's the next line.
It's absolutely somewhere down there.
It's just some down.
Actually, funnily enough, it actually does say it. I don't know if you could see this. Thousands of owners voted us the most trusted pet insurance provider in the MoneyWise Customer Service Award. So there you go. It definitely does say it. Job done.
Yeah. It's like in the US adverts, when they then very fastly, do the kind of fine print on medication.
And Nick, thanks for picking up on that.
You just put a disclaimer somewhere on your website.
Yeah. No, I think that's so. If you were to advise, let's say let's take two scenarios. Let's say I am a insurance executive, and I'm in charge of growth, right? And the two of us have a beer and we have a trusting relationship. And you say, and he's like, listen, I'm responsible for new revenue. I really like the MGA model. I think I'm gonna get it through my board. What pieces of advice could you give me in terms of, what product distribution, what to focus on? Any sage advice there of someone who's kind of walked the trail?
And just to be clear, you're talking about the specifics of MGA versus carrier.
So what I'm basically, let's say I'm in charge of I wanted to run through two examples. As an insurer, starting a new business and being kind of similarly independent as an MGA would.
Yeah.
And the other one, I'm going to ask if what advice would you give a startup founder who wanted to start their own MGA? Let's leave it at MGA for now.
Right. So look, I think that for me, I'll touch on both those things. So firstly, for me, to be a carrier is more expensive, is more cumbersome from a regulatory perspective, and therefore can be a distraction. And the other thing that's really interesting, of course we've taken it seriously, right? I mean, we'd be crazy not to have considered it properly. But the economics, coming back to this conversation about economic basis, there's no justification for doing it on an economic basis. Now, there may be in some insurance lines, and I'm definitely not saying that this does not apply to everybody, but for pet, where pet has this unbelievably interesting feature, where it is actually it's for multi-line players like a reinsurer, adding in pet brings down the capital requirements of the player. It has a massive positive diversification effect. And so the unit economics or the insurance economics of being a carrier as a monoline carrier look worse than as being an MGA where you reinsure out all of the risk to a multi-line player. Now, that may be unique to pet, I don't know, and maybe this advice does not work to other lines. But in the marketplace that we are in, obviously exclusively in and around pet, we are definitely not short of opportunities for capacity. In fact, I join you just from literally the previous session I was on was with a capacity provider that I only know a little bit, ringing to try and persuade us to give them for us to use some of their capacity, their business writing capability, and we get this all the time. Like we get this a lot of the time. And then to your second question, what advice do I give? I mean, it's kind of like a very broad question, so I'm not quite sure I can answer it for everybody. But I do think that there is an important message around focus, about like trying not to run before you can walk, do the right things in the right order, and don't expect to be great at everything. You know, we are, to your opening comment, we are unusual in focus. And, you know, we've gone in the opposite direction of what most businesses do. We've kind of gone further and further and further into the point of focus. And this has enabled us to really, really understand our marketplace, to understand our customer base, to understand the potential opportunity space, and really to create compelling offerings that would be harder if we were doing 4 or 5 or 10 different lines at the same time.
But you see this over and over again. So in our company, we do mortgage advice. We started 10 years ago as an independent financial advisor, and then we saw there was a change of regulation in the mortgage space, and then we also shut down all the other stuff. And it took us more than a year, exactly the same year, just also telling. And then let's say from hindsight, we should have done it much earlier, much quicker. But it was a big relief. So people were preparing the website. Oh, I'm so happy we can take all the other stuff out and only try to focus on this content, etc., or this part of advice or this part of clients. So I see this over and over all the time, but it takes just a certain amount of time before these teams find out where to, let's say, focus on and then try to let's say get much more, bigger market share, and then perhaps also go abroad. So I'm very curious how you decide on where to expand next. This on the first step is, okay, you focus on pet, and then you say, okay, why Sweden, or what countries did you consider and why Sweden, or why US, or what are the experiences? What did you think about this whole decision process?
So it's an excellent question. So why Sweden? Many people ask me why Sweden, because obviously it's not the world's largest marketplace. And the answer is really simple. So it has actually a few aspects to it. The first is that Sweden is by some significant margin the most sophisticated pet insurance marketplace in the world. Let me explain what that means. Pet insurance was invented in Sweden in the 1890s. And therefore it has been there the longest. And the implication of that is that the marketplace is the most penetrated. So 60% of pet owners in Sweden insure their pets. Everybody knows it. It's well understood. It's a marketplace that works very, very well. By contrast, by the way, the UK, where pet insurance arrived in the 1940s, only 30% of pet owners buys pet insurance. So reason one is that if you're going to be great at something, you have to go to the marketplace where you'll really get tested the hardest. And we were able to bring some capability from the UK to Sweden that didn't exist in Sweden, but we brought a lot of things back from Sweden to the UK that the UK hadn't had. And a great example of the second one is that we were the first provider in the UK to offer televet, that we had seen working very well in the Swedish marketplace, and we brought it to the UK. So that's reason one. Reason two was a Brexit hedge. So at the time, none of us knew what was going to happen as a result of Brexit. And we were very worried about our European passporting capability from the UK. And so we went to Sweden with a completely separate standalone license from which, if we want to, we could passport into the rest of Europe. Now, as it turns out, that may have turned out to be unnecessary. We still don't really know. But that was the second reason. And the third, which is one that I don't talk about very often, when we launched in the UK, we used a third-party platform in the middle of our functionality. No customer ever touched it, but the policy admin system was a third-party platform. And we launched into Sweden with our own end-to-end tech. And it was a great opportunity to test it in live with thousands of customers or hundreds and thousands of customers, rather than doing it in the UK where we have hundreds of thousands of customers. And so it was a kind of a great way to test in live the functionality that we've obviously now brought back to the UK.
I like that very much, especially the first point you made is excellent. Because if you talk about, for instance, ecosystems or biotech, people would say we have to go to Boston because that's the world's ecosystem for biotech. But in the startup community, you often think, okay, they already have 60% of the, or they have the highest coverage. Let's take another country. But exactly to go there, which is a little bit counterintuitive sometimes for some people, that you go there where the market is the toughest, makes, if you are able to survive there or even gain market share, it gives you enormous a competitive advantage if you want to do the next step and become a global player.
I'll give you an example of something else that we did as a result of being in Sweden. So in the UK, every single provider in the UK says that if you go to that provider, you cannot make a claim for the first 2 weeks. So there is a 2-week exclusion period for claiming. In Sweden, this does not exist. And the rationale for the 2-week exclusion is that it prevents fraud, so that you don't find out that your pet is unwell, buy the insurance cover, and then go to the vet the following day. In Sweden, they've worked out how to offer for switching customers no exclusion period without increasing fraud. We learned how to do that in Sweden, and so now we are the only provider in the UK that offers this.
Yeah, very good.
Yeah, that's...
and then to your question about the US, the US is the fastest growing pet insurance marketplace in the world. The last 2 years, it has grown at 25% per annum. The penetration rate, so remember, it was 60% in Sweden, 30% in the UK. It is just 2% in the US.
Yeah.
And it's growing very fast. So imagine the opportunity for us. We've been in the UK is the largest market. Sweden is the most penetrated market. And now we're taking all of the knowledge of all of that to the fastest growing marketplace.
Yeah, would be a nice metrics to put the different parts in.
Yeah.
No, it's from a strategic point of view, excellent. And especially if you then would just take the amount of the size of the market, or the amount of the pets, and you also would add them. Yeah, I mean, that's I don't know how many times is the US.
So I can tell you
the size
of
of the UK or Sweden or something like that. Huh?
So the current marketplace in terms of premium, the UK is the largest, about 1.5 billion sterling. The US is smaller but growing faster, about 2/3 of the size. Sweden is a fifth of the size and growing the slowest. But in terms of pets, to your question, Tom, it's completely the other way around. Right?
Yeah,
the number of pets in the US dwarfs any other country in the world.
So how many pets are there in the US? Probably.
Well, I think I can quote you a number, but I'm not sure. I'm not sure it's a robust number.
Okay.
So I think the answer is 80 million, but I mean, I'm really not sure that that's correct.
It's a market sizing exercise, like a consulting interview.
Exactly.
Yeah,
exactly,
but it's an excellent example of that you focus on the quality and then export the knowledge you have gained in one market into another huge market where there's a very small penetration.
Yeah.
So out of interest, I kind of from our family background, which is actually quite similar. I think, classic car insurance and pet insurance are very much alike in the sense, I believe it's very emotionally charged. but for the right reasons or wrong reasons, you know, that I leave that to everyone else to decide, but it's very emotional. And it's probably one of the few insurance products that you really focused on. What they did to grow, what they had 3 channels. They had their direct channel, very much like you, their own brand, and they acquired them. They partnered with their pool of insurers to provide, because this is in continental Europe, you have a lot of tied agents still, like writing business, so not a lot of broker, that offered the product as a third-party product, and they work with brokers directly. Is this something you do as well, or do you focus on the direct route because of your experience with owning the customer journey and the advice? Just if you could walk us through that.
Sure. So we are very focused on the direct marketplace. We don't use brokers anywhere, although not human brokers anyway. So price comparison in the UK is important to us. So I don't think that you include price comparison in the broker description, Nick. I don't think that's how you.
It's funny. I think usually they are usually registered as a broker, I think, in most, but are usually factored into the direct channel because that's where most direct insurers get their juice from.
Yeah, so actually I don't think about them as being direct, but I definitely don't think about them as being intermediated either. And we have some distribution partners as well. But to your earlier question, direct remains the most important route to market for us.
So by inference, would that mean that how could insurers work with you? Just on the capacity side, or are there other ways of, I'm thinking there's other markets, there's lots of knowledge, there might be market access. How or would that defocus a little bit? Let's say I'm an insurance company in Switzerland, Germany, or France. Could they work with you?
I mean, so firstly, definitely, we're always on the lookout for new capacity providers. I mean, it's not something that we need right now. We have actually, frankly, a really great capacity set up right now, but never say never. And we have never, again, never say never in the future, but so far we have not manufactured for anyone else.
Okay.
I think if there was an opportunity to do so that made sense, we would be open to it. But it isn't something that we have done so far.
Okay.
So it's something that we're live to, and we get asked to do it often, but we haven't found the right partner yet.
Got it. Bit conscious of time. Maybe just what are any highlights in store? I mean, for 2021 and beyond. What's going to happen? What are you most excited about?
So we've got a pretty big agenda ahead of us. We are currently 250 staff. On budget recruitment takes us to another 290, which is kind of a little bit daunting, if I'm honest.
So is that plus 290 or plus 40?
Plus 290.
Yeah, that's okay.
Or what period of time?
Over a year.
Okay, so double.
Yes. We have some very big growth aspirations, and we need to do a lot of capability building in-house to be able to deal with that. So as you will be unsurprised to know, we're doing the capability building ahead of doing the growth, not the other way around. And so that's kind of interesting from our perspective. We don't have any new geographies lined up, but we're very much thinking about where next. We're only live in one state in the US, and so we've got 49 more and DC to get to do.
Which one was it? New York?
We're in Illinois. We're Illinois to start with.
Illinois. I thought like Iowa is a good. I learned that they have it's a good test state or something, and New York is really where you get your head slapped around from the regulators.
Well, the 4 large states in America of California, Texas, Florida, and New York are the hardest ones from a regulatory perspective to get approval for. Illinois is an interesting state. It is a mixture of rural and city, and obviously Chicago is a big city. Mm-hmm. So it's a great place to start. At least we thought it was a great place to start, so we can learn different consumer behaviors in different parts of kind of rural versus urban life. And it's so that kind of gives us a lot to do. And then we've got some new tech developments coming down the road, which everyone can look out for, which will be quite exciting. So we've got a lot going on.
Awesome. No, I mean, it sounds super exciting. You know, lots to best of luck, and you know, keep winning. I mean, it's really
that's our plan.
Really aspirational to watch you guys, and it certainly makes my life a lot easier, because it's always so, you know, if you want to have an example of, you know, a good go-to-market, you know, at least have a look at what you guys are doing, and then you can intentionally decide not to. But I mean, we've launched 2 pet insurance products for some of our clients, and they never heard of your name before. We've mentioned them, and I'm like,
how is that possible?
You know, and there's so much I think, you know, what you've said is, I think there's so much to at least learn and then to adapt. But you know, I'm a big fan.
Good. Very
May
good.
I ask you one last question about your...
You can ask 2 last questions, Tom, if you want.
Now, I'm very curious about your lessons learned or experiences with Munich Re.
Okay.
Because I think they were pretty smart in moving pretty fast.
Yeah.
If you just take the size of the company and I mean, pretty old-fashioned, big, incumbent, etc. But then suddenly they were moving very fast in this space. So I'm very curious what your experiences are, because I guess that a lot of people are just listening to this podcast who are perhaps also trying to build insurtech startups.
Sure. So I met Andy Rea, who was the person who eventually set up Digital Partners at Munich Re. Mm-hmm. At the time in our history when we were thinking of making this move to being more focused in a small number of areas. And in fact, it was the end of 2015. So we were very much in the middle of that journey. And I talked to him about what we were looking for. And he took me to the Munich Re reinsurance board to talk to them about what we were looking for. And that meeting on January the 18th of 2016 was the starting point for Munich Re's agenda. The stars aligned, if you like. I didn't know that this was something that they were already thinking of doing, but we presented them with an opportunity to get going. Andy has publicly said that we were the cornerstone of Digital Partners, which is lovely, and I'm delighted that we have a very long-standing and mutually fruitful experience with them. And Andy now isn't part of that, but the 2 individuals who now run it, Alex Lay and Charlie Burgess, we very much know well. And we're very excited about what they're doing with the next phase of the growth of that business. So it's been a really good experience. We work with them in Sweden, and we work with them, but not exclusively with them in the US.
Good. Nice. Yeah, that's also the impression that you probably were the first, and let's say creating also space for others to follow you.
Yeah. You can have one more question with pleasure.
Or are there any things, let's say, or mistakes in this kind of things? Because let's say on the strategy part, it's I think amazing and excellent. People can enormously learn from you. Are there also things, let's say, in hindsight, where you say, okay, this is a huge mistake, try to avoid this?
So firstly, I don't regret anything. That's not how I think about life. So I don't look back and go, oh, if we'd only done this. I think that, there are some things that I wish we'd done faster or quicker. So I think that we could have made the transition from being an introducer to provider earlier, but we would not have met Munich Re at the time, and because they weren't ready for this. So maybe that would have been too hard. And so that's hard to know. The COVID experience has been a really interesting one for us, where we've, in lockdown, everyone has wanted to be a pet owner, and we really have It's been a very positive experience for us as a business, and we've enjoyed that. We've grown fast and tried to hold everybody through that process. Obviously, working from home has had its toll, and we sent everyone to work from home before the government asked us to. I think that, clearly it was not possible to have known what the situation was going to be like, but we acted as fast as we could have done at that time. Fortunately, we have had very little impact on the individuals who work for us, and I would have had lots of regrets if that had not been true. But we told everyone to go home and to stay at home. And I think that we are opening very, very cautiously, very slowly. Sweden is open, the US is not, and the UK is not. And I think that I would, to your question, I would feel very reluctant to do things faster than we are. I think that if in a year's time we rushed to open and I looked back, I think I would regret that.
Yeah, we have the same opinion. Everybody's working from home since the first lockdown a year ago. Okay, thank you very much. Very awesome. Inspiring.
Stephen, thank you so much for your time, and best of luck, and hopefully at some point see you on the circuit again.
Yes, I look forward to that too. Excellent. Perfect. Tom, Nick, very good to see you again.
Thank you very much. Bye, Stephen.
Thank you very much. Bye-bye.
Bye.